Hi, and welcome back to the Food Fund, where we explore all things related to investing in food and beverage stocks. My goal is to help you put your money where your mouth is and invest in great companies. If you are like me, you love food and you love investing. So, it only makes sense that you will love this channel too. In this video we will be exploring Beyond Meat, the very popular plant-based meat alternative company. Let's see if it would be a great addition to a portfolio. Be sure to watch through the end of the video where I share my final thoughts on that. Now, let's go ahead and get started. Cue the logo. Let's start with some recent news on Beyond Meat. The head of Beyond Meat's human resources team is leaving the company, according to MarketWatch. In a filing to the US Securities and Exchange Commission, Beyond said its chief people officer, Margaret Trask, would step down the 13th of October to pursue another opportunity. She joined the company in 2021. Trask's departure extends an ongoing shake-up to Beyond's executive ranks. The company lost multiple top executives in 2021 and 2022 and its chief brand officer departed in January. Wow. While Trask's departure would be terrible as a one-off change, clearly several executives have seen the writing on the wall and have decided to eject. Let's find out why. Starting with the 1-year chart, we see that Beyond Meat had a CAGR of about -34%. Zooming out to the 5-year chart, we see that Beyond Meat had a CAGR of -35% since its IPO. Beyond Meat has been a terrible investment for shareholders. Now, let's take a look at the fundamentals to find out why this company's stock has performed so poorly. Gross margin is -3%. I always like to start with gross margin because if this is bad then the company has no hope. Negative gross margins are the worst. But, for the sake of posterity, let's continue. Revenue has compounded at around 37% over the past 5 years and has reached nearly $357 million most recently after peaking at $465 million in 2021. As a relatively new public company, some things are forgivable. However, as a growth company, declining revenue is completely unforgivable. Clearly, demand for the products is rapidly declining. Looking at cash flow, we see that operating cash flow worsened at a -40% CAGR while capex grew at a CAGR of 12%. As a result, free cash flow has gotten more negative over the 5-year period at a -32% CAGR. Beyond Meat is burning $211 million per year, improved from burning $438 million at its worst point in 2021. In addition to having negative gross margins, declining revenue, and massive free cash flow burn, Beyond Meat has also been diluting shareholders. Weighted average shares outstanding have increased dramatically since the IPO in 2019. Going from 42 million shares in 2019 to 64 million shares most recently. Beyond Meat has been diluting shareholders by issuing more shares, though the dilution has slowed from 2020 onwards. If Beyond Meat issues more shares again, this will further hurt shareholders. Now let's view return on invested capital. Return on invested capital has fallen from 4.5% in 2019 to -37.7% in 2023. This is just awful. For those who don't know, return on invested capital is a metric that shows how efficiently a company can invest in itself. Spoiler alert, Beyond Meat is not doing a good job. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 87 days in 2018 to 230 days most recently, Beyond Meat has done an ever worsening job at managing inventory. Last, let's explore Beyond Meat's debt. The net debt to EBITDA has risen from 1.1 in 2018 to -4.7 most recently. Given that EBITDA for the company is negative, this means that debt is rising for the company, and with the rising interest rates, servicing that debt is only going to get more expensive. This is a bad sign, which means that the company's debt load is increasing relative to EBITDA. The fundamentals of Beyond Meat are still not great, but it may be a buy for some extremely adventurous people who buy stocks of unprofitable companies that also have negative gross margins. In any event, Should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Beyond Meat. It is a food company with a gross margin of -3%. So bad. The 5-year revenue per share CAGR is -18% and the 5-year free cash flow per share CAGR is -21%. Nothing good here. Return on invested capital of -38% is also bad. Next, the cash conversion cycle of 230 days means it takes about 7.5 months for the company to get paid after manufacturing their products. Concerning debt, a net debt to EBITDA of -4.7 means that Beyond Meat isn't profitable with a large amount of debt. So from a fundamental standpoint, Beyond Meat is really awful. Now normally we would switch our attention over to valuation, but given that Beyond Meat isn't profitable, both the value relative to the S&P 500 and the price to earnings growth, or PEG ratio, are not calculated. Beyond Meat is in serious trouble. Negative gross margin means the more you sell the more money the company loses, so the company is actually now incentivized to stop production. Declining sales mean customers do not want the products. This could be the result of customers becoming more price sensitive and or simply falling out of love with the products. In terms of operations, Beyond Meat is spending way too much money, something that has been clear for a couple of years at this point. Based on all of this, I do think that Beyond Meat will not survive as a standalone publicly traded company. While they can issue new shares to raise money or take on more debt, I just don't see demand rising to support the cost of those maneuvers. However, I do think the Beyond Meat brand will survive. With a rapidly declining enterprise value, I think it fairly likely that private equity firms may take interest in the brand when it may likely file for bankruptcy in the future, which is very likely. In any event, this is a strong pass on Beyond Meat for me, but the fall has been instructive. Many thanks for watching. What do you think about Beyond Meat and the downfall of their business? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.